Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Welcome back to the Massive Passive Cash Flow podcast. I'm Gary Wilson, your host, and we're glad to have you back. Hey, if you wouldn't mind doing so, if you haven't already done so, is please subscribe to the podcast. It's on 30 different channels. Apple, iTunes, iHeartRadio, Stitcher, all your favorites. And while you're out there, go visit globalinvestoragent.com for the investors out there. I'm an investor. This is why we created this. These agents are not traditional. They're trained to work with investors and business-minded people. They have access to every single property and owner in the entire United States, residential and commercial. They know how to identify, analyze, and negotiate on and off market deals for you and I. And if you're an agent, by the way, this is definitely the time that just go on there and click on learn more, because the market's changing. And when the market changes, if you don't have investors as part of your model, it's going to be a struggle. If you do it, you're going to thrive. So don't just survive, thrive, and do that. And in any case, back to today's podcast. We had a great guest today, Stefan von Imhof, all the way from Australia. And we're going to talk about Stefan's community as a newsletter. It's all about networking, relationship building, and also it's a great way to raise capital too, I understand. So first off, Stefan, thank you really so much for joining us. I mean, this subject's going to be really nice. We very rarely talk about this, so that's why I like it. And we just want to say thanks for sharing your time and your energy with us.
Hey, thanks for having me. And it is a fun topic. Let's chat.
Yeah. So if you could, if you don't mind it, give people a little bit of a background, how you got to Southern Australia, and also more importantly, how you got into this line of work. I mean, it takes guts to be an entrepreneur, and what you're doing definitely takes courage. So I appreciate you doing that.
Thanks, man. Yeah. So the Australia question is pretty easy. I married an Aussie, and we moved here about 3 years ago. So
cool.
It's an easy one. In terms of getting started. So this was a lockdown business, a lockdown baby, like so many others. We had a pretty strict lockdown here in Australia, and nothing better to do on the weekends for about 3 straight months than basically start writing. And so I was writing, what I knew about. And at the time, I was the head of product at a company called Flippa.com, which is, you may be familiar, but it's a place for buying and selling businesses, websites, e-commerce sites, SaaS, that kind of thing. And we always considered at Flippa, that, an alternative investment, and a really great one too. And to this day, it's one of my favorite alternative investments is, websites, cash flowing websites, especially. But yeah, so I started writing about it, and I started a newsletter on Substack. We later moved off Substack, but after about 3 or 4 months, I got a pretty good following, and I was really starting to realize that the world of alternative investing was a whole lot bigger than just what I was writing about. It was getting into all sorts of things that were happening in the world with, collectibles and farmland and wine and artwork and music rights. And it just seemed like there was this, kind of explosion of opportunity all of a sudden that was fueled by, technology. I think a lot of cheap money, low interest rates, and just a general curiosity and people looking to kind of invest in their passion, and so it seems like, it was kind of worth maybe expanding. And around that same time, there was another gentleman, his name is Wyatt, and now he's my co-founder, but Wyatt had a newsletter that was covering alternative investing as well. So we were kind of doing the same thing, except he was coming at it from kind of like this other world. So we were kind of covering different areas of alternative investing, but we were fans of each other's work. And so one day I just called him up and I was like, hey man, like, let's just join up and team up and, build something together. And we never met in person, although we're both American. We both happen to live overseas. He lives in Spain with his wife. And so we never met in person, but we decided to form a company together. And so about 18 months later, here we are.
Cool. Well, I tell you what, I've never been there. My daughter was going to actually move there several years ago, and unfortunately, she has a brain tumor. She's still here. She's teaching, living a regular life, but because of the way Australian medical system works, they declined her visa application because if she had gone to Australia, she would have been on the Australian medical care system by default. The way it's set up, and
Yeah.
it wasn't like a personal thing. It's just the way they do their business down there. But in any case, I've
Yeah.
had relatives down there too, and when we were kids, we used to love the accent and the stories. They had an RV, drove all around. I was like, that's what I want to do, man, when I grew up. So
It's a pretty great country. It's a really easy country to move to coming from America too, right? Because the
Yep.
culture is just so similar. It's a very accepting culture. It's got basically the world's highest per capita level of foreign-born immigrants, which no one realizes, but much higher than U.S., Canada, everywhere in Europe, basically. It's a pretty good melting pot. It's a wealthy nation. The medical system is definitely great. I literally the only bad thing I can think of is just how early you have to get up in the morning if you want to deal with the U.S. And I certainly do a lot of visits with the U.S., so I'm up at like 5 o'clock every day.
Wow. All right. Well, let's jump into the so you're working with Flipper for a while, and now it's the company you have is alts is it alts.co alts.co?
Yeah, alts.co, exactly.
Okay. Well, let's kind of lean in on that a little bit, and talk about the newsletter. Doing the newsletter, is that what led you to that, and then building the community? And the reason I'm asking, I've actually got clients who are looking to buy businesses. That's just what they do.
Yeah.
And they like online businesses too, by the way.
Yeah, absolutely. I mean, so buying businesses is definitely one of the asset classes that we cover. On a personal level, it's one of my favorites. I think it's one of the most underrated out there. This is, it's the word is starting to get out for sure, but yeah, I mean, it's a great world. The thing with buying businesses though is the due diligence is really, really high. The bar is really, really high. Yes, you can buy businesses for, 3 to 4x annual net profit, which is pretty amazing. But it definitely, it comes with a risk, and you also have to know how to maintain the business and keep it going. It's not usually a walk in the park. There's a lot going on. And so the biggest thing is due diligence. And so when I was at Flippa, I basically started Flippa's first due diligence program. It's since expanded, but yeah, I mean, I basically was the first, started the program because, I realized look, this is the biggest blocker for people. We've got to be able to, make sure that they understand what they're buying, they feel comfortable with it, they understand the pros and the cons. So we kind of took that thinking, that alternative investment analysis and evaluation mindset.
Okay.
And I kind of took that and applied it to all sorts of other alternative investments, right? So you can apply the same, frameworks to stuff like, buying real estate, for example, or buying alternative real estate. And not only was I kind of doing that, but my co-founder Wyatt, I realized he was kind of doing the same thing. He, even before co-founding Alts with me, he kind of came up with a system of evaluating the values of rare books. So as really interesting stuff, and no one else is doing it. And so we just kind of had a pretty similar mindset about how to find the best deals and how to understand and evaluate price and returns and yield and risk. And so we basically, like I was saying, we joined forces and we kept growing and growing our community and our newsletter. So we're up to about 52,000 now.
Okay.
And the big thing that we did was about a year ago, coming up on about 10 months ago, we raised some pre-seed capital from some investors in Australia and the US. And the reason we raised money was because we wanted to bring an investment fund to life. And the idea was that, we had people in our community that were coming up to us and just saying look, I trust you guys. I read your stuff. Can you just create a vehicle, for us to, invest in, and you go and find the best of the alternative investments out there. And we'd always wanted to do something like that. But, it took quite a bit of work, a lot of legal structure, a lot of, paperwork. We we knew it would be a pretty tall order. And so we raised some capital. That in itself was a pretty big, process, but we were able to raise some capital. And then we went out and we secured the capital, and we hired a CFO. We hired the rest of our team. We got the legal infrastructure in order. And then this past April, so just about 8 months ago or so, we brought our first fund to life. So that's the Alts One fund. Mm-hmm. And what we're doing is we're going out and we're buying a bunch of criminally undervalued, eclectic, modern, exotic alternative assets. Okay. The kind of stuff that no one else is touching, right? Mm-hmm. And so the fund is live, and we can talk more about that if you'd like. But it's pretty cool to bring this to life.
Yeah, I do want to talk about two things. So one of them is that the newsletter itself, which is Alt.co, it's growing. I mean, I when I read about you, it was 35,000. Now it's 52,000. You're growing, like every month you're adding another 6,000 subscribers. And you and your co-founder, which is interesting, never actually met in person. And so far you've raised $1.5 million to grow the company, probably more than that by now. So I want to, so the raising the funds, is that through syndication or is that through the membership? If you could talk a little bit about that, and if you could go ahead and lead into some of those alternative assets. I mean, when I've read about you, I've read about the farmland, sports memorabilia, watches, even NFTs, and maybe a lot of people don't know what NFTs are now because they're still touch on that. But sorry for the loaded question, but start with the business development part of it, because I think that'll really help a lot of people. A lot of the listeners are business owners, and they're always looking to grow and expand their business, and they may pick up on something you're talking about. About raising those kind of funds with your partner. That would really help a lot, and then we can go into the assets.
When it came to raising funds, we knew we had a pretty good opportunity to raise from the community itself. Mm-hmm. It's we've built a lot of trust with our community. We've we trust is earned in drips and lost in buckets, and we never intend on losing it. And we definitely trust is very important to us. So we knew that we could probably raise some capital from the community. So with the 1.5 that we set out to raise, we expected probably about 10% to come from the community, but it turned out it was actually about 30%, which was really awesome. The remaining 2/3 came from institutional investors that were actually derivatives of the community as well, right? So like introductions through people who read the newsletter and that kind of thing. I mean, it was definitely a little bit of both institutional and retail capital. Since then, we've done some subsequent kind of add-ons to that pre-seed fundraising. So we've done some extensions. And almost all of that has come from the community and the extended community, especially right now, given that venture capital is pretty dry, to say the least. Mm-hmm. So a lot of that funding comes from retail, which is exactly what we've done. And then in terms of the assets, so we have a research team and some analysts here, and their job is to a couple of things. They help us on the research side for the newsletters we produce and the content we put out there. But then more importantly, they help on the analysis side for finding, the best assets, and then also figuring out, like, can we get them at a good price, right? So it's a 10-year fund. Our fund's a 10-year fund. We're not looking for quick flips or anything like that. Like we're looking for stuff that's eclectic, that no one else is touching. And that is just, in the long run, the 10-year run, it's criminally undervalued is the way I like to put it. So the very first thing we did, we went and we bought a Daredevil comic book, the number one Daredevil comic book. And we got this at auction, and, it's highly graded. Really just the perfect kind of asset for our fund, the kind of thing that you just, no one else is really buying. I mean, we're not competing with other funds. We're competing with collectors and stuff like that. So we identified the asset, and then we had to win it at auction. So that's the other side of things, right? It's like you can't just go and buy this stuff. You gotta bid on it. You gotta hustle, and there's been stuff that we've had our eye on, and we just cannot get it for the right price. And it's like real estate, you make money when you buy, not when you sell, right? So we got to make sure we keep our cost basis very reasonable. But yeah, that was the first one we bought, and then we went and we bought a sealed Star Wars action figure with Darth Vader, which was number 2 from the '70s, still in the package, highly graded. After that, we got a copy of the Beatles White Album that was the number 2 copy ever produced. We believe it was owned by John Lennon, so we were able to win that at auction, which is pretty neat. As a music fan, that's and a vinyl collector for that matter, that was a big deal for me personally. We've bought some British modern artwork from an auction in London. Bridget Riley was one of the artists, and she was very ahead of her time. She has a modern style that lends itself very well to social media and to the digital age we live in. She's also, she's quite elderly, and she's getting up there. But I'll tell you, she's still sharp as a tack, that one.
Yeah.
But yeah, I mean, we think she's a great one for the fund. We're working on our first music rights deal. We, I mean, this is the kind of stuff we do. I mean, so it's like, when you buy into the fund, you basically get access to all of this stuff, a fraction share of all of this stuff. So it's a great way to hedge against inflation, to broaden your portfolio, and to basically find uncorrelated assets that are, just kind of on their own track, completely detached from, equity markets and even real estate for that matter.
Yep.
Yeah, really, really cool.
What's interesting is that I've never invested. I mean, I do collect. I have coins and some gems and things like that, and some museum grade art. But really, it's almost like an amateur hobby thing for me. It's just like if I get lucky and find something unique and I think it's a good deal, I'll get it. But in any case, it's very similar to me to crypto. Like I started getting into crypto in the last year. And at first I was, skeptical, unbelieving, because I just didn't know anything about it. When I learned about it, I realized, okay, this is real, and it's probably going to change the way human behavior. And it already is actually. Yeah. So you mentioned there the NFTs, and I realized, just like I was when I first started hearing about it, I didn't know anything about it. I didn't know what crypto even was. But do you do any of you still do any NFT investing there, or anything look unique in that world? Or if you can talk about that without mentioning names or anything, but
Oh no, that's fine. I mean, so it's funny because the crypto and NFTs are very controversial, and a lot of our community members love them, and a lot equally as many hate them. I shouldn't say equally as many, but the hatred is feels equal sometimes. So they're very bifurcating. We do see a place in the fund for crypto for sure. Interestingly, we didn't deploy a dime into crypto and NFTs when the fund was launched because we felt it was, towards the end of a massive bull run. We were exactly right about that. So we waited on that, and then we started, dollar cost averaging our way in a few months ago. We're still actually not, we're not up. No one's up right now. But in the long run, we're definitely buying at the, what we think are the lows over a 10-year time frame. I mean, I basically see crypto as basically just a form of digital gold. It's been said a million times. It's nothing new. There's going to be great buying opportunities for it. There's going to be great selling opportunities for it. One thing's for sure, it's never going away. I mean, anyone who doesn't understand that by now is, I think you gotta really, look in the mirror, because, you may not understand it, you may not like it, but it is not going anywhere. That's for sure. There's just way too much gravity around it, With NFTs, we bought, we have bought some NFTs. I won't name which ones, but we have bought some. But it's not a huge part of our portfolio. It's the kind of stuff that we strategically buy, here and there when we see a good opportunity. It just so happens that right now is this is the lowest, it's been since a year and a half. So it is a pretty good time to be deploying the capital. Even so, it's still, there's still a lot of risk there even now. So I mean, it is a part of our portfolio. But again, we're looking for the long term. That so much in the NFT world is all about quick flips. That's not us. We're looking at stuff for the the long term. We're looking at NFT projects that have a potential to get bought or raise capital themselves, right? We're looking at stuff that is turning into a brand or it's franchisable, right? And there's only about, you can count on one hand the number of blue chip, quote unquote, NFT projects. Those are the ones we're interested in.
Yeah. I just wanted to take a moment to say thank you for participating in the Massive Passive Cash Flow podcast. Also wanted to let you know that the book Global Investor Agent is officially out in print and in Kindle on Amazon. You can get it by clicking on the link right here. If you are an agent, definitely grab yourself a copy. This book, guys, was not just written by me. I also included 8 other investor agents from around the country. And I didn't just handpick them. I literally opened it up to the entire audience, and it was first come, first serve. So you're going to get feedback from brand new agents all the way up to top 25 team leaders, some on my team, some are not on my team, with valuable insight and instructions and guidance and actual checklists to follow to not just survive but thrive in this market. I know you're looking for that advantage, and this is it. By the way, if you are an investor, grab a copy for your agent. And for everybody, all profits from the sale of the book, Kindle and print, all go to the Healing House Foundation, 100%. Thank you for doing that too, guys. Let's get back to the show. Well, I appreciate you sharing that too, by the way. And I do agree. I know in the scheme of things, crypto is still really, really new, but it has been around long enough to establish a foothold. And there's enough of a community there. It's big enough, strong enough. And it's a,
oh, yeah.
What's interesting, it's such a departure from institutional money, countries and big banks and even aristocratic families. Back in, thousands of years ago, the original fiat being money, of course, currency, every country had their own. And again, some of the big families had their own. And, then you fast forward to 1970s, the United States took the U.S. dollar off of the gold standard. It wasn't backed or based on gold. It is now based on full faith and credit of the U.S. government. It says it right on there.
Promise, hope, exactly, yeah.
It's based on people's confidence in essentially our GDP, and our ability to run a country. So if you look at crypto, you strip out the institutional part of it, banks and countries and all that. What it's based on is people's confidence. Bitcoin's the original and the true. It's still the only one. I believe it's still totally decentralized. But what it does is it relies on the human being, the individual citizens of the world, to be the shopkeeper. And because of the way the software is designed, So to me, I've got a computer science degree. I understand that, but I've talked to my family members and they don't understand. What do you mean decentralized? What do you mean you're the citizen or in control? And so I think when people can cross that barrier of understanding, it will make sense to realize, oh, that's just like the U.S. dollar, except that it's a sphere, a dimension different than the dimension of the banks and the countries,
I think the key what you said there is global. That's the one thing that just, if you travel a lot, you really get out there in the world, you realize it's easy to just, especially if you live in America, it's easy to just forget that a lot of countries and how they operate and not think about it. And I'm telling you, it is such a big deal overseas. I mean, I remember my first time when I went to Romania was probably 2014, 15, that area. And, they were already into crypto then. I came back 4 years later and everyone had it. And it's just such a big deal to have a global currency. Really, really big deal. The problem is there's not one of them though, right? You got Bitcoin, you got Ethereum, you got a million altcoins, none of which are really valuable. So, it's not like there's $1, right? There's one digital dollar. The big thing I think we know is happening is that the banks themselves, the country feds are going to start making their own digital currencies. And, that'll be really interesting to watch. But glad you definitely have a great understanding of it, because it is important to have a baseline understanding of, how this stuff works, because it'll be with us for the rest of our lives.
Yeah, I appreciate that too. And I'm glad we're able to, it should be a part of everybody's world, even like you said, even if you just know about it, it's really important that you know about it. But for me personally, I really do believe that in the realm of human history, this is going to be one of those watershed moments in time.
Oh yeah, absolutely.
Our kids are going to look back and think, wait, you guys did what? You had actual paper dollar?
Yeah,
So,
yeah. It's a wild thought, but yeah, we're seeing it play out right now. But the other thing I think people have to remember is that this stuff takes a long time to move. I mean, we're talking about money here. This is an institution beyond almost anything humans have ever created in terms of capitalism. I mean, I can't think of anything bigger. I mean, it's almost like language, right? Like, so it's going to take, it'll take a long time for this shift to occur, but it is happening for sure. And so,
yeah, I agree.
We're living through it right now.
Well, I tell you what, let's go back to the our living dimension, which is our other assets and the currency that we have historically. What I want to do is go back to the alternative assets, like art and stamps and coin and unique things, like you said, the White Album and recording rights, things like that. How do you actually value those things? I mean, I understand how to value a house and a car, but how do you value the White Album, for example? Do you have an algorithm for that, or if you can talk about that a little bit, that'd be great.
Yeah, we're creating those indices that didn't exist before. So we're trying to understand. I mean, every market's different, right? So like when you say like how do you value all that stuff, it's like every single asset class is different. So a couple things going on. Number one, like we rely on a lot of help. We don't pretend to be experts in all this stuff. Like so we have a lot of experts in individual asset classes within our community, and we tap them for sure to help out. So that's number one. Number two, a lot of research and analysis, including understanding the data that's out there, and if the data doesn't exist, then creating it ourselves, right? So, like with vinyl, for example, like it's no secret that vinyl is definitely on the upswing. It's starting from a low base, but it's growing faster than anything else in music. It's pretty wild. So there's a couple of public resources for vinyl prices and stuff like that, but there's not enough. There's really not enough publicly available information out there. So we basically just create our own index. And so it's all about comps, looking at the comps, looking at the auctions, looking at the hammer price on auctions. So let's say we see a Queen album that's, let's say like Night at the Opera, and it's signed by all the band members, and, it's up for auction, right? So I basically look, okay, what other Queen albums have sold that are signed by everyone? It's going to be pretty thin. It's probably not, you can probably get one or two signatures, but to have the whole band signed, I mean, that's a big deal. Yeah. And you got to factor in the fact, okay, well, some of the band members, as we know, are no longer with us, some of the important ones, so to speak. And, that's a big deal too. It's you can never replace that, right? You look at the comps, you look at the other auctions, and maybe you run out of Queen comps. So then you say, okay, what is that signed Zeppelin albums going for? What about signed Pink Floyd albums? And on and on. You kind of just triangulate this, with quantitative and qualitative analysis, and arrive at a price that you think, based on the growth rate of all of this entire asset class, which is growing at least 20 to 30% per year right now, which is crazy. Yeah. You basically think, okay, like we can pick this up, and in 10 years, this will be quite an extremely valuable and rare piece. And so then you just got to win it. That's the other part. You got to win the auction. But yeah, I mean, there's a process to it for sure. It's a little bit gut and a little bit of luck, but it's a lot of math too. It's a lot of charts and graphs and absolutely data.
Yeah. I actually interviewed an appraiser probably a year ago. And he wasn't like a real estate appraiser. He's the guy that appraised the Golden Gate Bridge several years ago, and he was one that appraised the London Bridge too before it was sold to Havasu City, Arizona. But that's what people voted him. Yeah, for these. How do you value these? How do you value the Golden Gate Bridge? He figured it out. He didn't give us the formula because he said it's not like it's a formula. You're right. There's a lot of intuition, insight, and foresight, and he gathers a lot of data from other assets that have been sold around the world, alternative assets. I thought that was really neat. But really, what really got me, I thought maybe I should get into his business too, because he said, Gary, now when I do appraisals, I don't do anything that he doesn't earn minimum of $1 million per appraisal. So I'm like, okay,
I
well,
can imagine. Oh, there's no one else who's doing it in the world besides him. I bet. I mean, that's fantastic.
yeah,
And frankly, if you're in contact with the man, I mean, if available, we'd love to chat with them and have them on our podcast and maybe write about them for our newsletter. That's the kind of stuff our audience would love to hear more about. So yeah,
that's a good idea. Let me make a note here to introduce you. And I can't remember his name, but
okay,
I'll have to find him. We'll just look for. We have of course, a podcast landing page and the show notes and all that. So I'll do a search or have Beverly do it. That actually would be probably a really good podcast for you.
we'd love to write about it. I mean, the idea of valuing a bridge
Yeah.
is fascinating. Plus, I've heard of the Lake Havasu London Bridge thing. That's fascinating. I need to look into that more. So, yeah, that's great.
Yeah, I got a selfie in front of it. So
Nice.
in any case, so back to this. I know we're going to get short on time here very quickly, but I want to cover a few more things if you don't mind. You mentioned some of the alternative classes, and I guess the name of the game is it really is all about alternative investments, alternative to the traditional stock market, which is where I got started. Mutual funds, stocks, bonds, things like that. Of course, real estate. But is the goal, like, is a part of the mission to beat stock market averages or some kind of benchmark you'd like to meet? And then the second part of the question is, how does someone invest rationally in these alternative classes? Because like with real estate, it's been around for hundreds of years, and we have models to follow and formulas to follow and all that. But here, it's and by the way, the reason I say this is, even though we have those methods and tools, it doesn't mean everybody's acting rationally. It just helps them to remain rational, by using facts. And so the part two is, how do we do that with these alternative classes? First part is, what's the, ultimately, as far as a measurement, is it to beat the average increase in real estate or averaging, returns from the stock market? And the part two is, with something like this, especially like with crypto, it's easy to get caught up in the fray. How do you invest rationally in these things?
I don't think our goal is necessarily to beat the equity markets. What I do think our goal is to be a hedge against the equity markets and to give people an asset class, or I should say an investment opportunity that is uncorrelated. See, the problem is everything is just one giant graph now. I shouldn't say everything, but let's face it. I mean, S&P, NASDAQ, Bitcoin, most, even real estate, it lags a little bit, but it's all the same graph. It all goes up together. It all falls down together. And that's fine, because in the end, it all goes up, as we all know. I mean, there's no question about that. But it's, if you're just doing that, if you're just investing in the same ETFs and index funds and everything as everyone else, like that's great. But what happens if you need cash right now during a downturn? What happens if how are you going to give yourself an edge? How are you doing anything different from the next person? Right. Like, so, I mean, we want to give people an opportunity to, invest in an actively managed fund that is, the goal is to be uncorrelated with everything else and to find stuff that's just doing its own thing. And that's exactly what we're doing. And on top of it, the stuff that we're buying, the hard assets that we're buying, they happen to be a great inflation hedge, much like real estate, which is basically the best inflation hedge you can get. But I mean, even within real estate, like we're not buying single family homes, like, we're looking at alternative real estate. So we look at things like storage, cold storage. We look at vacation rentals, although those are becoming mainstream too. But we look at senior living. We look at tax liens. I mean, nobody is investing in tax liens. It's really rare. And like, this is the time to do it. Foreclosures are about to go up, like unpaid taxes start to happen. So how do you, as an average investor, get access to something uncorrelated like that? Good luck, right? And so like we go out and we do the research and we find the tax lien funds and we, fold them into Alts One, and that's exactly what we're doing. So that's number one. And then in terms of like, how do you invest rationally? It's like, I mean, that's exactly why we exist, right? Like it's funny because like so many of these asset classes are super emotional, right? Like talking about sports cards, memorabilia, like collectibles, like, I mean, it's tough not to get caught up and swept up in the emotion of the stuff. It's nostalgic. It's emotional by design, but we try to take the emotion out of all that, right? We try to apply, in every single market and every single opportunity, we try to apply a quantitative analysis so we can understand, like, this is a good deal and here's why. Now, in some markets, you're right, we don't have 100 years of history like we do with real estate or the stock market, right? 100 years plus of how markets behave and how human behavior works. And on top of it, a lot of these markets are thinly traded, right? So they're volatile as heck, right? And the liquidity is tough. That's just par for the course, but you work with the data you have. Every market has at least some information out there, some history, some data, even the newer ones. You just work on based on what you have. There's really nothing more you can do. You're not going to get any better than that source of truth. So that's what we do.
I appreciate you sharing that. We have a formula we call upside potential versus downside risk, and it's all based on what information you have. And you may have a little bit of information or a lot of information. It varies, and sometimes you're in situations where you have parts of you look at a balance sheet or a financial statement. Sometimes things are just flat out missing, but the reality is what we try to do is gauge the upside potential. What's the upside potential, and gauge the downside risk. And the greater the spread, the more likely we are to make the investment, particularly the spread on the upside. But as things change, interest rates go up, and that means, heck, if you're in the bond market and you got all these bonds sitting there at 1% and 2% and 3%, you know what? You're in trouble right now because people go out now and get bonds at 6%. So, in any case, that's what we try to gauge. But it ends up being basically a gut call based on as much information that you have. And if you try to measure upside potential, downside risk, and you look for that spread, usually your instincts are going to be right. So yeah. Hey, I tell you what, I know we're way past the half-hour mark, but I really have loved this subject, and I want to make sure everybody knows how to get a hold of you. So the newsletter, it's alts.co. Is that correct?
That's right. Yep, alts.co, and just check out the site, check out the the content we're putting out there. If you like what we're putting out there, then absolutely, it all starts with the newsletter. So sign up, and we'd love to have you on board in the community.
You got it, man. So what I'll do is we'll definitely get the word out. And thanks again, Stefan, for sharing this.
Yeah.
And you're
Thank
right. You didn't have the classic Aussie accent.
No.
But it definitely sounds like some Northeastern there. I'm guessing.
Oh yeah, I'm from Boston originally. Yeah, it's been 20 years since I've lived there, so it's not quite as strong as it used to be. But maybe after a drink or two, it comes back.
There you go. That's the same thing with a Southern accent. You can always tell a Southerner because we go out and have a few beers that says "yeehaw" and y'all.
That's right.
Yeah. Well, in any case, this has been a really good one, and for everybody listening, please leave a good review. Leave a review because these things are all done it's like a community service, and podcasting is a great. It takes time, effort, energy, and money, but it's free to the community. We're glad to do it because it helps spread the word, and we bring on these great guests like this. So your review is actually what makes the world go round. So we appreciate you leaving these good reviews. And while you're out there, go to altscode.com, alts.co, excuse me. And
that's
after
right.
that, leave the review and then go to globalinvestoragent.com. And if you're an agent right now, well, you really need to click on to learn more because you don't want to just survive in this market correction. You want to thrive. And the way to do it is to work with investors. A lot of investors, by the way, are doing the same things we talked about today, guys. They're looking for alternative investments in addition to real estate. And I'm one of them. So I'm the one that created the Global Investor Agent team. So in any case, everybody take care of yourselves. God bless you and your families. And we will see you on the next Massive Passive Cash Flow podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.